Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look what's going on the euro currency. Yes, it was a bit tricky price behavior because some speculations already have started around the Jerome Powell speech in Wyoming. It should happen in Europe approximately around 3-4 o'clock, so it will be early in the morning on the United States. And currently the two major camps exist and on a view what JP should said. So the one part of the trader suggests that it should confirm the dovish sentiment of the Fed and should give the hints on the starting of the major dovish cycle from the Fed. It's because markets already priced in September rate card and so on. Another camp suggests that it should fix the conversation mistake that has been done in the last rate cut. So actually, it was no necessity to cut the rate in previous meeting, and the Wyoming speech could be used to calm down a bit markets and to give them the ability to understand that it's not as bad in the economy as they think. Personally, guys, at least by the statistics that I see on the market, I also think that it's no big necessity for a rate cut right now. With the growing inflation that we see right now, it's gradually still rising, and the wage inflation, and with a good consumption, but not bad actually, gross domestic product release, with a highly utilized employment, it's more necessity could appear with the chill down the economy to escape the overheating of the economy. And in this condition, usually Fed should rise the rate, not decot it. And currently, personally, I just do not see the reasons for that. Well, but I am not in the Jerome Powell, of course, and he probably knows better and have more detailed information. We just could use the hindsight in the statistics that we have this year. But I think that it could be dollar supportive decision, and I'm not sure that Jerome Powell will confirm the exceptionally dovish view on the Fed policy perspective. As a result, I still think that here we could get a spike down today, at least to hit the 110 target in CLP. This is what about the fundamental part. From the technical point of view, actually story is the same. So what do we have? Market has raised rally, shows the collapse and then stands flat. Here we have no supports, no extensions, nothing. So here is relatively free space right to the 110 lows. No oversold, actually no support at all. Market shows no significant reaction, no pullback, even on the targets that have been hit with these downward intraday extensions. Yesterday, the minor breakout has happened that we talked about, but it was limited by just minimal target. So market just taking out of these lows and then stands flat. So currently everybody just waits what Jerome Powell will say. On the 4-hour time frame chart on the euro, our triangle shifts to rectangle. And it was really tricky action. Once we have talked about the grabber, it have immediately worked out. The taking out of the stop, it's minor, the stop minus spike here has followed, and then market returns right back down. At the same time, bearish dynamic pressure that we have talked about also has worked because market has taken out of these lows. But at the same time, we do not see a really big progression in the direction of the breakout. So market just stands flat, although in the lower part of this consolidation. Why I think that downward action is more probable based on the technical picture. The reason for that, again, in the dollar index. So let's go step by step on the dollar index from the starting point to the current moment. So if you'll take a look at the daily chart, what we have? We have here the XOP extension and catalyst equal to sell, which actually was ignored because market hasn't shown any 30% pullback here and stands flat. The hint on the possible reversal session, it's not quite reversal, market hasn't quite closed below the lows, but in general overall price behavior looks bearish. So here market has created the new top and collapsed and closed almost below the lows of the previous session. It's not quite a reversal, but it's very stands nearer to this. After that, we do not see any continuation. So market stands mostly flat. So market stands in a sideways action right at the XOP target without any respect, and right at the point where triple two pattern has been completed, but no reaction in downside action. Let's go further. On the hourly chart, so on the 4-hour time frame chart, we probably do not have something special. On the hourly chart, the hand and shoulders pattern that we talked about has changed the shape. So market multiple times jump up from the neckline back to the right arm top, again back to the neckline, and back to the arm's top. And here is actually has exceeded the 618 resistance level. So currently, this market just shows big volatility around it, but we do not see any downside breakout. We do not see any development of the price action here as it should be, according with the hand and shoulders pattern. It means that here, on the right part of this pattern, bears do not control the market. And it means that actually this hand and shoulders is losing its features. So it doesn't work properly, which means that chances on the upward continuation taken out of this top looks greater. So it's really possible. So that's why I think that downward breakout currently, I mean on the euro currency downward, on the dollar index it's up, looks more probable in the current circumstances. So personally, in the current situation, I do not want to take the short position here, or I do not want to take the long position on the euro. So that's what I do not like in the current situation. So I would suggest that downward breakout here is more probable in the euro, and if we combine the technical picture and what I think on the fundamental part. So what else we have? On the euro currency, you can see the market has created the new lows. On the dollar index, we do not see yet the breakout of this top, so market just stands flat, forming the same dynamic pressure. So on the euro currency, this is bearish dynamic pressure. On the dollar index, this will be bullish dynamic pressure. So you can see market shows the bearish trend, price action is not. So we do not have yet the breakout and taking out of this loss, of this top. So how we could trade it in general. So if you still would like to trade the Fed statement, Jerome Powell's speech, personally I'm really not the big fan of the trading such events. We could again think about the stop orders, because currently, although personally I have the view that it should be upward direction here in favor of the dollar and the euro currency correspondingly to the downside, but we could use the stop orders. So the volatility probably will be strong, and if it will be upward breakout, it will be probably significant. So in this case, stop order around this area, I mean stop entry order, buy order, could be used for taking the long position, while stop order below this area probably could be used for taking the short position, although we can't exclude different volatility, spikes, stop hunting, and so on. So the common stuff that stands around the major political and fundamental events. That's why I do not like to trade it. So because currently, except the relative signs and direct signs that we just have discussed, what we have on the dollar index, what we have on the fundamental part, currently we do not have clear patterns. So we do not see any hand and shoulders on here, butterflies, free drives, nothing. And it means that market stands in the range, and to possess yourself with the trade, you could use only the breakout out of this range. And how to do this? well, take the position by the stop order on the moment of the breakout, because currently inside of the rectangle, well, probably could be taken position, could be taken, but I do not see reasonable way how it could be done. So that's what we have currently on the euro situation. Not really very simple. It's still tricky, and it provides significant risk. But I suggest that volatility today also could be really significant. So let's see what will happen.